Imagine waking up to a single social media post. One sentence, a claim that the United States Navy was preparing to escort oil tankers through one of the most dangerous waterways on Earth. Within minutes, oil prices spike, shipping stocks jump, defense contractors surge, currency markets twitch, and then the post disappears, deleted. But by then, the damage is already done. Because in modern financial markets, information moves faster than ships, faster than missiles, faster than governments. And sometimes, a single message can mean billions of dollars. This is the story of how a deleted tanker escort post triggered massive volatility across global markets. To understand why a single message could shake markets, we first must understand geography, specifically the Strait of Hormuz, a narrow corridor of water between Iran and the Arabian Peninsula. At its tightest point, the shipping lanes are only about 2 miles wide in each direction, and yet every single day, nearly 20% of the world's oil supply passes through this corridor. That means the global economy runs through a hallway of water narrower than many airport runways. If that corridor is threatened, oil markets react instantly. Because if Hormuz closes, the modern world doesn't just slow down, it stalls. Now imagine markets already on edge. Tensions are rising in the Middle East. Oil traders are watching every headline. Shipping companies are adjusting routes. But then a message appears online. It claims that the U.S. Navy is preparing tanker escort operations. For anyone familiar with geopolitical history, that phrase carries weight, because tanker escorts are not routine. They usually happen when the region is on the edge of conflict. The last time the U.S. conducted large-scale tanker escorts in the Persian Gulf was during the 1980s tanker war, when Iran and Iraq targeted oil shipping. Back then, warships escorted tankers through minefields and missile threats. So when the post appeared suggesting escort operations again, markets reacted immediately. Oil traders did what they always do. They priced in risk. Within minutes, oil futures surged. Shipping insurance rates jumped. Energy stocks moved sharply. Because in commodities markets, perception can be just as powerful as reality. If traders believe supply might be disrupted, prices rise before a single barrel is lost. This is called risk premium pricing. And when the risk involves the Strait of Hormuz, that premium can be enormous, because the world's energy supply depends on that narrow channel staying open. But then something strange happened. The post was deleted. No explanation, no clarification, just gone. But by then, algorithms had already seen it. News aggregators had already captured it. Screenshots were already circulating, and the market reaction was already underway. In modern markets, deleting a message does not delete the impact, because financial systems react faster than corrections. This is where the story becomes less about geopolitics and more about how markets work today. Decades ago, traders relied on newspapers, then television, then the internet news. But today, markets are increasingly driven by algorithmic trading systems. These systems scan headlines, social media posts, and news feeds in real time. They search for keywords: military, oil disruption, escort, strait. When those words appear together, trading algorithms respond automatically, buying oil futures, selling airline stocks, adjusting risk positions, all in milliseconds. So when the tanker escort post appeared, machines reacted first, humans reacted second. And by the time anyone asked whether the information was accurate, the price moves had already happened. This reveals something profound about modern markets. They are not just driven by supply and demand, they are driven by information flow. And information today travels at the speed of light. A tweet, a government statement, a deleted message. All of these can trigger reactions across energy markets, equities, currencies, shipping rates, defense stocks. Because markets are essentially prediction machines. They constantly ask one question: what will happen next? And when uncertainty appears, prices move. Of course, the reason the tanker escort rumor mattered at all is that the region itself is unstable. Iran has previously threatened to block the Strait of Hormuz. It possesses sea mines, anti-ship missiles, fast attack boats capable of swarm tactics. Meanwhile, the United States maintains the Fifth Fleet in Bahrain specifically to secure Gulf shipping routes. This means the region operates under a constant balance of tension. One miscalculation, one escalation, one shipping incident, and the global oil supply could be disrupted. So when markets hear the phrase tanker escort, they don't hear routine logistics, they hear the possibility of conflict. The deleted post did not create the risk, it simply revealed how sensitive the system already is. Modern markets are like a tightly stretched wire. A small vibration can travel enormous distances, because energy markets sit at the center of the global economy. Oil powers transportation, manufacturing, agriculture, shipping, air travel. When oil prices jump, the cost of everything else eventually follows. That's why traders react so quickly, not because the disruption has happened, but because it might. And this brings us to the deeper lesson. Financial markets today are built on speed. Speed of information, speed of trading, speed of reaction. But speed has a cost, because the faster a system reacts, the more vulnerable it becomes to noise. A rumor can move prices, a headline can trigger billions in trades, and sometimes a single deleted message can ripple through the global economy. The tanker escort post lasted only minutes, but its impact lasted far longer, because it revealed something uncomfortable about the modern financial system. We live in a world where trillions of dollars react to information instantly, even when that information might be incomplete, or temporary, or deleted. And when that information involves the world's most critical energy choke point, the reaction becomes explosive. Because the Strait of Hormuz is not just a shipping lane, it is the pressure valve of the global economy. And if a single post can shake markets, imagine what happens when the threat becomes real.